What's going on, everybody? Welcome to another episode of Hard Work Beats Talent, where we aim to draw upon the insights of our inner circle in order to help our listeners make more informed decisions about their careers and life journey. I'm Nikita, and I'm joined, as always, by my good friend and co-host, Alex.
It's good, everyone.
Thanks for joining us today. Before we get into it, can we please ask you kindly to subscribe, follow, like, and comment on our social media platforms, such as Instagram, LinkedIn, and across our listening platforms as well, YouTube, Apple Podcasts, Google Podcasts, and Spotify. It really helps us, and we would be really grateful. Thanks very much, guys. And so, today's episode, we are very honoured to introduce to you another member of our inner circle, our good friend, Andrius.
Hey
Andrius,
guys,
how you doing?
I'm very good. Excited to be here.
Great. Thanks for joining us. We really appreciate your time. And we know you've got a lot to share with our listeners. So we're looking forward to get into it. And with that, so as we get into it, could you give our listeners a little bit of a summary about what you do, who you are, and where you're from?
Yeah, sure. So my name's Andrius. Good to see everyone. I was born in Lithuania. Came over to the UK when I was 12. Went to university to study economics. Then after university, completed my CFA, started a graduate job at an investment bank, and I've been there for over 8 years now, and I'm currently a securities finance trader in the front office.
Very cool. So you've mentioned a lot there, but starting with what you do today, like what does that actually look like day to day? What do your tasks involve? Who do you work with? Do you work alone? Do you work with other people? It'd be good to get.
Yeah, so that's actually quite a big bit of. I've prepped a bit of thought about how best to speak about this, but actually, as you know, with some investment banks, there's some of the sort of the areas where they operate are quite niche, and if people sort of tell you what they do, is actually like sort of just nod along and pretend you understand. There are strategists, quant modelings, and all the other people on the front office at the moment that work with me that I actually don't really fully understand what they actually do. So I'll give you a bit of background of like sort of what it is that I actually do, and sort of break it down into more sort of understanding terms, and do tell me if I'm sort of going into too many details, but I thought the more the better, and you can always
Can I just say that along with the listeners, I'm going to be learning here, because I recently took a front office role, and I'm in that process of trying to work out what on earth's going on. So yeah, I'm super grateful for you coming today.
I've been here a while and still not really sure what I'm doing. But yeah, so essentially what I do on a trading desk, being in the front office, my main aim is to try and make revenue on behalf of our clients. And the way we do this, we sort of utilize their unutilized assets. So essentially, with that in mind, is to sort of break it down how it actually fits into the whole ecosystem. So for example, if your pension fund, so yours and mine pension funds, by law, they have to have a custodian, which is a specialized security services firm which offers things like safekeeping, sort of middle office management, and just a load of sort of back office features. But essentially, in order for your pension fund to hold those assets, they need to have an account and one of these custodians. So what my team currently does, it's essentially like an add-on to one of these custodians, like an add-on service. And once that pension fund does sign up to our service, what we can do, we can take those assets and do so as we see fit in order to try and make as much money for the pension fund as possible, while not interfering with the day-to-day business. So essentially, that's where we kind of fit in.
Sorry if I can pause there. What kind of clients are you instructed by or act on behalf of?
So to be fair, as a big sort of...
No names, just examples.
So mainly, to be fair, mainly mutual funds. So, all European investment funds. So when you go on your platform where you might have an ISO, you've got Andrius Zalys as a big example. That's what we use. You might select a fund, and that fund has to have a custodian. So that custodian might be with my company. Okay. So once you buy those assets for your ISO, for your pension, those assets might end up at a custodian that then I'm allowed to, if they sign up to my add-on service, I'm allowed to then do with those assets as you see fit in order to make that mutual fund or that pension fund as much money as possible. Because at the end of the day, the fund manager of those funds essentially is interested in getting the best possible returns for the clients, i.e. yourselves, if you're holding those funds. And the difference in a lot of these, it could be seen as quite a small difference in terms of what we add in terms of overall growth of the portfolio. However, we could be the difference of you making the top quartile, and if you make the top quartile, we get a lot more inflows, and that's the way you're kind of ranked as a mutual fund or a pension fund. So once those assets do come into our world, there's sort of 3 ways that we actually ended up trading them and making the money. So again, I'm going to sort of break it down. I hope I haven't missed anything, but I will sort of try and give you as much detail as possible. So what we firstly do is facilitate client shorts. And again, what I mean by that, there are funds out there in the market who, for example, are allowed to buy equities and go long, buy and expect them to go up in price, and sell them and go short. So what I do, I then enter into a trade structure whereby I lend this client your securities, and they end up shorting those securities and selling them. So selling them in the market using my securities to deliver that sale. Expect the price to go down, and if it does go down, they might end up buying them back in the future, delivering them back to me, and obviously they capture profit if it goes down, whereas we profit irrespective if it goes up or down, as long as that trade gets put on.
Right.
If you see what I mean. So as much from, so you'd ask why a pension fund might be interested in doing so. I'd say it's because they're more interested in covering our pensions, for example. Their time horizon is a lot longer, whereas there are funds out there who might try to bet on a shorter term volatility. So essentially, you're using like a really long-term assets in order to cover your short-term shorts. So like I said, that's one area where we sort of make money.
Just on that, for the benefit of myself and the listeners. So my understanding of that is the pension fund, they're going to be holding these stocks and bonds for a long period of time because they're looking longer term about making a return for their customers, i.e. us as pension holders, so that we can have a kind of our portfolio grow in size, so that when we come to retire, we have money to live off of. Absolutely. Rather than just leaving it sat there. Through lending it, they get a premium, right?
Yes,
so they get paid to lend the security, and then once they get it back, they're no worse off. They've just made money out of holding the security.
And so that's exactly that. Sorry to interrupt. But what they're capable of doing. So the whole idea behind this is when you sign up to the service, your service is seamless. So we don't interrupt. So if you decide to sell, we'll manage our way. We'll find a way for you to get rid of those securities. You will never be impacted. Your day-to-day business will never get impacted. So as a portfolio manager of those funds, you will do as you see fit for the long run. But if you do decide to, sit on those securities, we're then able to take those securities and trade them away. And obviously, it depends how much you earn based on things like how liquid it is. So if you're trying to, short a main index security, potentially not going to earn that much. But if you're, shorting a mid-cap name in Taiwan, for example, there's a much more bigger premium for that. So, depends on sort of what markets you trade in. And
sorry, I'm mindful, it's so easy to go into the jargon.
Yes.
Security, we're talking about shares or bonds as well?
Depends. I try to differentiate between the two, but people, I try to say instrument, investment instrument to cover them all. Yeah. And security, I do bonds, but I do equities, but I don't know if that's the right way. So
no, I think
you're
the expert.
And that's the thing, a lot of our listeners will be listening to this and considering whether this is a career that they're potentially interested in going into, and so kind of taking a bit of a step back, we kind of have a bit of an understanding of what your job entails in terms of theoretically. When Andreas comes into the office on a morning, right? And let's do this let's split this up into because you've been there for quite a while now. Let's say when you started, and then how that compares with today. You walk into the office. What does your job involve? Obviously, you go to your desk, you grab your coffee, you have a little chin wag with some of your colleagues, and then what are some of the key tasks that you're then instructed to, or you begin to get involved in? So let's start from day one, where someone would start and some of the key things they do, and then today, 8 years on, you're more experienced, you're doing something completely different. What does your day look like today?
Yes. So to be honest, I'd say there is obviously a big difference between when you start to when you're 8 years, but because we are such a small trading desk, you do kind of tend to do quite similar things. Okay. Just to maybe in bigger scale and more value stuff, but at the end of the day, you do end up dealing with the same clients, the same trades, and understand what we do. But I said, if you're probably a starter, just as soon as you start on your desk, your main priority when you start, you get in, you run all your sort of macros, any information that's coming overnight, you gather all that data, you sort of pump out the automated trades, what we call. So put all our trades on a platform where we're happy that our robot prices them correctly, so we're happy to trade those trades automatically without any input from us.
So you do like a bunch of analysis as well.
Yeah. So that's kind of that's an ongoing process. We kind of do that on you build an algorithm. So there's quite a lot of IT skills involved. But essentially, when you do that, once that's all done, you get into work and you run your lists, you get them out of the way, and then what you do essentially, a lot of the time will be spent managing a book. Especially as a junior, so dealing with the small issues that might come up, whether it's settlement issues, whether it's like rate issues, want to get the better price because there's been some bad news overnight, or managing, like you said, if the fund manager sells the shares, you might want to work out a way how I can keep that trade on while still earning money while satisfying my client's needs. All those kind of little things, I'd say that's where the priority would be for someone more junior. Dealing with any overnight issues, obviously being on a global desk, as soon as we come in, or a lot of the time we overlap with Asia, so sort of picking up the last ends of Asia and seeing what's sort of happened there, and maybe helping that team out.
And I don't know if you had this experience, but I was speaking to an MD the other day who worked on a trading desk as a junior, and he said initially for the first few months what he was doing was taking lunch orders or taking coffee orders because
I forgot about those days.
I'm glad he said.
And we're here to give you all the truth.
No, because
we need to hear the unadulterated truth.
And I've stirred a lot and made a lot of teas in my day, but he said that he couldn't understand, why am I making tea? Why am I getting lunch orders? And it was broken down to him that if I can't trust you to get lunch orders right, I'm not going to trust you with the big trades down the line. So I think it's good to just put that in that you might have to do things which don't seem like they're related to the job initially, but that's part of the building trust to then get to do the more interesting stuff down the line.
100%, as well as the way we kind of used to view it. Obviously, that's what I was told, and then you kind of do grow up with that kind of attitude. Is obviously you might argue your time is more valuable after, if you're an MD, you've been there for 20 years, your time is more valuable. So if you're away from the desk for half an hour, 45 minutes, you might miss something that's actually adds a lot of value to the firm. Whereas as a grad or someone who just recently started, I know it's a bad way to look at it, it shouldn't be that case, but it's the truth in terms of you're the best person to go and do this for us in terms of to us save time, and we can either finish our jobs on time today, or so we're not here for too late, and we make sure we don't miss anything on the desk. But yes, that's the sort of the side of the background I try to sort of just ignore.
But no,
never happened.
He said that by getting the orders right and going around to more senior staff, they're the same people that you can ask the questions to, so it serves another purpose, and there's another side to it. So
like a networking aspect.
100%. It's very much an icebreaker too, because some of these people, depends what environment you're in. And to be fair, I was lucky. What the investment bank I'm at, it doesn't, as much as all bankers have the same reputation. These people are just really nice, but they might seem unapproachable because they're so busy. So
very stressed, and there's a lot of money on the line.
Exactly. So they're just lovely people. Take them out for a drink. Fantastic. Really lovely, really nice people. Sometimes on the trading desk environment, they might come across a bit snappy and a bit rude, but you just know they're not like that deep down. But again, that takes some time working out, because you don't know who's like what, because everyone can appear the same, especially if you're a grad, you come in unexperienced, then you're not really used to people talking to you in that, passive aggressive way.
An aggressive tone.
It almost say it's aggressive. It's just kind
direct.
of underlined.
Very direct and assertive.
But then again, what you said, I know it seems like such a simple thing, but that breaks a lot of ice. You go to these senior people, chat. It's a simple thing to do, because otherwise, if your jobs don't overlap, realistically, these senior people might not ever speak to you for whatever reason. They just don't have the time. Obviously, they do try to. They're trying to be inclusive. But
sushi again, is it?
And all of a sudden, there's that icebreaker. Next thing you know, you might get some more work from them. You might help them out, and might get introduced to a different team. And all of a sudden, that's how you kind of learn how to deal with different people. And as much as I'm not very good at the small talk, but you do have to get much better at in that environment.
Kind
of be outside the comfort.
John, milk, 5 sugars. We go again. Can I ask you a really naive question, right? Because I'm not particularly experienced or know a great deal about this industry itself. People would have watched Wolf of Wall Street, and it's all go, buy, sell, all that kind of stuff. But you talk about the trading desk. What's the difference between the trading desk and the trading floor?
So to explain that, so trading floor is the whole floor where all the traders sit.
Right.
But when we say the trading desk, we call a particular team. So whatever is the
Okay.
product or whatever is the service that you do, you might be a trading desk in
Right.
that particular product. So essentially all these desks, I don't know why I came across that way, but they all sit on the same floor. So
Okay.
one big
So it's like
trading
it's a
floor.
team.
It's a team
for the
within a
product
trading floor.
or-
Exactly that.
Yeah.
Yes.
Got
So
it.
that's what
Got it. No,
lingo,
nice.
and again, lingo.
Nice, I like that.
But
And in
But
terms
you
of
did, sorry to interrupt. You
Sorry.
did say about being in Wolf of Wall Street. It's nothing like that whatsoever. It's a lot calmer. It's a lot nicer. People, like I
Yeah.
said, people are great. And
So I did some work experience at stockbrokers. It wasn't like The Wolf of Wall Street, but I could understand aspects of that film because of the atmosphere. What I've seen in finance is very different, but yeah, I think
maybe
I'm
a while
sure-
back when you did, yeah, maybe that times of thinking
Yeah.
moved on, 'cause that has very much been, from my
Stamped
experience,
out, yeah.
stamped out by
Yeah.
at all levels.
Yeah,
Pretty much
yeah.
all big banks. So that's very much a.
how about your working hours, the culture within, some sort of moving on to that, what's been stamped out and stuff, but like the culture that you work in, your working hours, perhaps sort of like the diversity of the trading floor or your desk, how does that look?
So the working hours, to be fair, they haven't really changed since I've been there. It's always been, realistically for us, it's 7 to 6, pretty much.
Okay.
Standard. Luckily, I'd say with times, with COVID happening and with all of that, I'd say there's obviously more flexibility in what you can and can't do, and people are more understanding it. You might have, whether it's family commitments or even going to the gym.
Okay.
But as long as now all of that is managed on the desk level, but the working hours haven't really changed at all.
Okay.
We do try. I'd say when I first started, again, because I came into a while ago, so the environment was still changing. So when I came in, it's still very much, you don't really leave your desk. You just get at 7, go to a break whenever you want one. The toilet break.
Yeah.
That's pretty much it, and go to get everyone lunch. And you don't. That was the environment. Whereas now, we do try to kind of change people's mindset, especially because you can't really change what people want senior. You try to sort of do it with the more juniors coming in. So try to be given more the flexibility, not too much. They obviously need to be very good at what they do, improving themselves. But once they sort of do get to that stage, you do try to be more understanding and allow them that flexibility of good.
Okay.
Just to
And is
kind
that
of,
quite common across the industry, or is that
it
something
is very,
for
very
like
varied.
your employer?
It's extremely varied. I'd say it's more like the team dependent, because whoever runs that trading team, it's almost up to them.
Yeah.
Because if they think their team's performing, they don't really mind if the team's working from home 3 days a week, or they're in the office 2 days a week, or if they're 5 days, or what the flexibility is all managed by our organisation anyway. I can't speak to everyone else's, but I do know from speaking to people on the street or other banks, is that they can be very, very still strict, very sort of old school approach.
Right.
Which that's why I've been. That's why it's a great place to work. Where considering what we do, you do have a fair amount of flexibility.
And what regions do you typically cover then?
So I cover
to kind of have that working structure. Do you cross over much with like the US stock markets?
So US stock
Asia?
market, obviously we cross over hours, but we don't really do, because it's a US investment bank, so we've got very good presence in the US, so we never really touch any of their stuff unless there's an issue that out of their hours that somehow before they get in we try and assist. But mainly would be sort of just European, most European markets and APAC, so APAC, Asian markets, because we relatively got quite a small presence, and if someone's out, or if there's a very big deal going on that where we want to be aware of, then that's where we'd sort of step in and help.
Nice.
So just bringing it back to what it looks like day to day. So from what I understand, you essentially provide a custodian relationship to mutual funds and pension funds.
So I don't do that. That's what I was kind of trying to give a bit more background. So that's what my team's attached to essentially. But we don't, as a big bank we do. But again, a big bank employs 100,000 people. There's so many different teams. So I'm not responsible for that whatsoever. As I'm essentially responsible of driving revenue for those clients, while mitigating any potential risk within internal risk policies. Just sort of to cut back from that, I'll sort of give another couple of examples. I'd say they're a bit more interesting, because obviously covering shorts is the biggest of our volume, but then it's the driest. The robot can almost do it. Like we don't really get touch that stuff that much. I would say a much more interesting side would be with the corporate actions optimization, as an example. Whereby we really get this the riskiest, but definitely the most enjoyable side of the business. So like I said, so now I'm more senior. I'd come into work, and my job would be potentially to look any news like the companies might have announced, whether corporate action. So there's anything that a company essentially does is a corporate action, whether that's a rights issue, stock splits, or anything else. A lot of these corporate actions do have value in them, especially if there's optionality. So, for example, again, I'm not going to go into too much details, but when there's a rights issue, so a company announces a rights issue, like especially during COVID, a lot of airlines announced a rights issue because they needed to raise extra cash because they're really struggling with outflows and no money's coming in. So that's when a company would announce a rights issue. And what essentially a rights issue is a company requesting more money from existing shareholders. The reason there's potentially value in those rights issues is as a current shareholder, you might not be interested in getting any more shares for a number of reasons. Maybe you just don't see, in this example, airline business to be any good. Maybe you're already at your limit, how many percent you can own of a certain company. Or maybe your position's too small for you to even action because it's not really worth your time.
Okay.
So then what happens is we'll take those, what we call inefficient elections, or work out what's the most efficient, or when I say efficient, is something that's worth the most in a market, for example. And in order to attract these people, these current shareholders, to provide more money, they would have to, they price it below the actual market value. So what we then do, we essentially take those inefficient elections, elect whatever is efficient in the market, whether elect the stock, buy the stock, sell it, see whatever's the best for our clients, and obviously capture any spread available. That's very much a basic corporate action. Some of them get really convoluted and really tricky to act out and do take up a lot of time, but they can also be quite rewarding from a revenue perspective. And obviously, at the end of the day, most of our revenue that we make does end up with our clients' underlying costs. And at the end of the day, that's their assets we are trading, participating in. So that's something that's very, I'd say it's very interesting part of the job because it changes daily. It depends what companies announce and what sort of corporate action and what is there to do. So that's the area, yeah.
So you look at that, analyze it, assess it, and then you feed back to your team some of the potential opportunities that may exist.
Exactly that.
And then they look at those opportunities.
I'd probably still look at that. Depends again how big the opportunity is. How to split up, what markets, if you cover the same markets, or how big the opportunity. But and again, who's someone might be off the desk or whatever reason. So so I'd be the one sort of agreeing everything with all the parties. Having a client on the other side who might execute that trade for me, and sort of locking in the profit of that particular trade. So that's something that's quite interesting, takes up a lot of your time because again you have to go from company perspectives work out what some of these things means. Most of them aren't based in England. It might be a Swedish or a German company. You need to translate them all. So it is quite interesting. I'd say that's probably one of the more interesting sides of the trading that we do. And sorry, just to, I know one more, and then I promise I'll sort of leave it there.
It's very interesting. I'm learning a lot.
So that's the corporate action optimization is, like I said, there's a lot to do, but also what we call financing trades. So as you know, since Lehman Brothers went under, or that was 2008, which was the financial crisis. So what that caused all the regulators to have a long, hard look at all these banks and work out, okay, why, what can we do to make sure that doesn't happen again? And essentially what they've decided to do is, make sure these banks, one among many other things, but, one I can actually influence, is have really good, strong capital buffers. But I mean by that is really strong HQLA, what we call, so high quality liquid assets. But as you know, for whatever reason, these banks might not own that stuff. So what they try and do, so the clients that do hold those assets, we enter into what called financing trades. So essentially we provide financing for these banks, and whereby they'll give us collateral against those really high quality liquid assets. So for example, we give them United States Treasuries, which are seen as the most, essentially the best asset class.
Not Bitcoin.
Yeah, we don't take Bitcoin as collateral, but I was going to say we might take some Taiwanese equities, some questionable, not questionable, but some stuff that's not seen nowhere near as liquid. And obviously the further down the curve the collateral is. So if you do normal equities, I say normal European equities, you might charge X. If you give Taiwanese equities, it's completely different end of the scale. You do ETFs, you can charge a lot more. So these trades, again, they take a long time to structure. I'm talking months. There's a lot of legal work involved, risk agreements, all of that stuff with other different banks. But once you do get them over the line, they do tend to stay on for a number of years. Depends, how much demand there is for that sort of financing needs. So that's also very interesting. There's obviously a lot of completely different. So one side of it was you have to react instantly and make sure, you get the short in, you cover that particular security, whereas this, takes months to build essentially, and it's almost like a lot more structured trade.
Okay.
So I'd say that's 3 areas. And
No, really interesting, and it sounds quite diverse, and like it requires a lot of skills. Like, could you briefly touch upon like what you think the key skills are for your role, and were they things that you say had naturally, or have you like honed them over the years?
So one of them would be definitely attention to detail, because like we have to execute trade after trade without making a mistake, and a lot of these, especially corporate action ones where they are so risky, it's very easy to get them wrong.
Right.
If you don't take them, and there is a lot of money on the line that you can lose. So, and also, you might do 50, 100 trades a day, hypothetically speaking, but to make sure you get one right every single time. For every penalty, there's a fail cost. There's a lot of cost involved for everything you do wrong, and they're very visible, and people have very high visibility of you. They'll sort of bring up like X, Y, Z. You did this. This.
What qualifies as a mistake or a bad trade?
So anything,
for those that don't.
So as simple as could be as simple as booked the wrong date. Booked to the wrong counterparty, booked the wrong price. Or from a corporate action perspective, if you don't pass the correct election, if you mess up that's has a much bigger impact, but they're harder to do. And like I said, we're really careful with those. But more of the sort of just the BAU, which is business as usual, day-to-day flow. It's just getting the simple details wrong. That's where it kind of and they'll fall over. There's a cost that it doesn't settle. There might be a cost further down the chain.
So there's something almost, it's like a bounty check. So you make the trade, you made a wrong, you inputted the wrong detail, and it
similar to that, but then sometimes
there's a cost with it.
You can obviously get a cost passed on from the other side, who have to deliver that trade onwards.
Right.
But then if they have a much bigger cost on the other side, that cost gets passed on to you because you failed to them. So
It's very binary, isn't it? Like you've either got it right or you got it wrong.
There's no way out. So that's what I mean. Attention to detail is probably the
weekly meetings are mad. It's just, everyone's getting called out.
Pulled up. Yeah, you literally get an email as soon as you mess it up. You're like, this X, Y, Z.
This is coming off your bonus, by the way.
Please don't.
Yeah.
And any other skills? Like it sounds like you're working quite closely with people. So teamwork.
Yes, people, very much teamwork. I'd say obviously people skills in general, just obviously teamwork, like meeting all the different teams, like managing risk, managing the lawyers. That's just internal, and obviously there's a lot of the external side because we deal with so many other different banks that we actually are involved in going out for a lot of lunches, a lot of dinners, building these relationships with the counterparts that we execute these trades with. We don't just trade with the exchange, we trade with another party, and we might, I don't know, roughly speaking, we've got 40-ish parties stand up in Europe, so these relationships that do need to keep maintained. So we'll go out there, speak to them. So there's a lot of client interaction, and obviously teamwork within a team. So, and those skills I definitely had to work on, because I remember when I first came out of uni, first of all, like I said, completely different environment. You go to a meeting, you just get sort of chucked in there, and you're like, what am I doing? What am I saying? Like people skills, and you obviously get sort of taken aback by maybe how senior some people are. Like we sort of spoke of off air, and you really shouldn't, because you can't undervalue yourself.
Yeah.
Because you just assume because someone's got a title, or someone might, been in a job for 8 years, for example, he knows what he's doing, or he's much better than me. Absolutely not. You're good at what you do, and you should have that confidence. So it took me a long time to get that instilled in my own head.
Do you know what? I was actually having this conversation with my partner the other day about exactly that, and correct me if I'm maybe taking it down the wrong path, but when you were in the legal industry, like I'm a solicitor now myself, and like yourself in the finance industry, we're in that doer level where we're doing the work, right? And your skills are incredibly important. And the higher up you climb, the more it becomes a people game, particularly when you start getting into management and things like that. And the skills that you've acquired for the actual doing of the roles become less so important, and it becomes more of that people skill based game. So it's so critically important, I think, particularly if you have aspirations to get into management or climb the corporate ladder, or develop those skills early, as important as it is to develop your hard skills in whatever it is you're doing, in this case finance and analytics and understanding economics, all that kind of stuff. but develop your personal and interpersonal skills, because as you start climbing, they're going to become more and more important.
Absolutely.
And just to add to that, like Esther Perel, one of
our icons.
Yeah, she's up there. She says the quality of your life is determined by the quality of your relationships. And I think that extends beyond like your kind of personal or romantic relationships, and even in a working environment. Often your peers or people more senior than you who might take mentoring roles, they can be your most valuable asset, right? So I think tapping into like kind of human resource through building genuine relationships can make your career a far more pleasant experience than trying to do it all by yourself.
Yeah. Sounds really good. So just moving on then, can I ask you, and can you describe for us how you got into what you do, and sort of, your key influencers, who we've got a rogue flag, guys. We're like trying to waft it away.
Fourth member.
Yeah, the fourth member of the inner circle. So how you got into it, who your key influences were, and what the mode of entry was into your career, if that makes sense.
Yeah, it does. Let me know if I'm going offline here. But yeah, so the way I got on it, which I thought was the path that everyone kind of went on at university, it's essentially roughly work out what you do after you've done your economics degree, and then apply to as many grad schemes as as there are. So and again, it's very much a big mistake. So yeah, applied to this. We'll come back to that, but I've applied to many grad schemes, managed to get one that's was kind of fit for me, which I thought it was. But if I'm perfectly honest, I kind of went for numbers over necessarily quality. And, I might have wasted a lot of time applying for stuff I was never going to get because I didn't put the extra 5 or 10% that it needed to do. And, so I went on doing all these exams and, doing all these numerical tests when realistically I was never going to get it. And even if I did, I probably wouldn't have taken it just because it was kind of there and that was the thing to do. Yeah. And again, that's a very bad attitude to have. And, that's what, if you look back, I'm 100% got it wrong. But yeah, I've got this job in the back office at the time, like a graduate scheme. So where, you rotate over different seats.
Just if I can ask you, for the grad scheme, for people listening, do they have to do something specific at university? If they're interested in going into this, do they have to study economics or something at uni to be even eligible?
Yeah, so I think when I maybe went, or just before, you probably did. It was very much a BAFSA subject, very much a quant based. So even economics was almost on the verge of maybe potentially not. They've want to get as many quantitative analysts as possible. But I'd say now, especially in my place, I've definitely noticed that people are hired from all sorts of backgrounds. Very much like even artsy. I'd say the degrees.
Oh, okay.
Where people they're almost interested as have diversity from backgrounds as well as backgrounds from educational backgrounds. They don't want people come from the same cloth and have the same ideas. You come in as an economist, come as a quantitative physician, you will probably end up going down the same route. You probably won't see the other path, which they're trying to hire as many different grads from all different backgrounds, which is great.
Does that extend beyond just university grads as well? Or is it still strictly graduates that they take on?
So actually, this is one of the points you've looked into, and I definitely should mention on this pod. So I've never really realised, because I thought you can only get into a bank. You do your maybe 2 years do internship or 3 years, or how long your degree is, and go straight into a grad scheme. But actually, again, don't know it was out there. So great to get out to your listeners. So we actually do that. A lot of these banks offer. They're almost like internships that we, like potentially a school leaver. So there are loads of different schemes.
Oh, like an apprenticeship?
Like apprenticeship almost,
okay.
Yes. So, like you're a school leaver, they might employ you on the full-time basis. You might not, you might take a while to get to where you want to go. Yeah. But, then you might start from the back office and there are some sort of roles there. What they also do for school leavers, they essentially hire you straight away. There's a process where you can get on one of these programs, and they'll you'll work with them during your summers at a sixth form as well as through university. So by the time you get out of university, you essentially worked almost a year or however long that is, 9 to a year at a big corporation, which again is fantastic for building out your overall skills. Skills, hard skills.
One of our guests, his sister Charlie, I think she's at university now, but before she got in, she I think secured one of these. It wasn't in finance. I think it was with one of the big four, and they paid for her tuition. When she goes to uni each summer, she gets paid to go and work there for a few weeks, and you essentially almost guaranteed a job after university should you decide. And I think, that's a really good thing to get out there, because a lot of people will look at tuition fees, $9,000 a year, and think,
absolutely. Like I said, it's so big, and like maybe some people might not be able to afford to go to university. Whereas this is a way to have a great job, have potentially a great career. Again, I said great, it all depends on what you're after. But then, like you said, have an opportunity to go to university that could potentially be covered by some of these big corporations. And obviously very well invested to, first of all, getting their name out there and, providing these career paths for so many people who can't. They do give back a lot more than I ever thought they would have done, especially with the change environment. So I would definitely say the first thing you do, find out what's out there, just get your teeth involved into all these schemes and work out what might be right to you. I'm not saying you'll find something that's out there that fits perfectly, but if you can build your skills instead of finding a summer job, I don't know, doing something else.
It's experience, isn't it?
Exactly.
And particularly like if you're a younger listener, speak to your parents, and I think you can probably assess with them whether you're more of an academic learner based on your present experience in school, and perhaps if you're more of a practical learner, if you excel at design and tech and other more like practical type of studies, then maybe an apprenticeship is more for you. And I think this kind of almost levels out that stigma as well, right? The stereotype that apprenticeship are just for like skilled trades.
Exactly.
That it's not. You can go into like a say professional corporate type of career through an apprenticeship as well. So
and if to add to that, you probably by the time you get to a graduate scheme, you're already a step ahead, or a few steps ahead of some people. All these graduates that come in from all these might be, we've seen great universities. If you've done that, you might be, a few steps ahead. So something definitely to consider.
So, mindful of time, that's been really interesting, and it's given us a lot of food for thought. I don't know if you had.
Can I just ask one more question, Andreas? Just very briefly, you mentioned your grad scheme involved you being in the back office, whereas now you work in the front office, right?
Yeah.
What's the difference between the two?
So again, back office essentially people who the jobs that you do mostly post-trade services. So something that you're not essentially a revenue making person. You just ensure that whoever made that revenue, essentially that trade settles, and the client confirmation goes out. All sorts of the what we call a back office.
So you kind of it's the like services. Ops side.
Exactly,
that's
what
that.
it is.
So you guys do the trades, you close deals and stuff.
Essentially,
and then there are people in the background who like fill in forms,
make it actually happen. I'm just the sort of the face, and
actually
some people actually do all the really really hard work. That actually requires. So there's no
work that you've done yourself.
Oh, absolutely,
well.
And I can definitely appreciate it's hard.
Stripes.
And exactly, 100%.
Yeah.
So like again, in our company, we try to make sure we don't have any sort of stigma. Like everyone's there to do a job. Everyone's there to, you can be as good as you can on front of us.
Yeah.
There is no one there to do the hard work or good
enough.
Yeah. It's not something, and it's not happening.
But before we move on to your background quickly, I think it would be good because finance is so, I found mysterious, and it's unnecessarily complicated. And we often get told this isn't rocket science. It's just the jargon you need to get your head around. So I think what we could perhaps do is link in the show notes to just some maybe some articles which might add a bit more kind of colour to all of this, so that if our listeners do have an interest, they can kind of have a good place to look in terms of some further material on this. But
something like Investopedia or something like that. Yeah, it's a great resource. Yeah.
But moving on to your background, can you just give us an insight into your educational experience? Did you go to a private school, state school, and what your familial background was like?
Yeah, so I was born in Lithuania, like I sort of covered earlier, to a maths teacher and a footballer. And I definitely got more of my mum's genes because I'm terrible at football. And I sort of relocated to the UK when I was 12. I got put into a secondary school, a state secondary school, halfway through year 7 without actually speaking much English. So that was quite a tricky, situation to be in. It was when I first came over. It sort of started at a relatively good school in Lithuania. Came here, and it was not just a culture shock. Don't really speak the language. The lessons aren't really the same, the people aren't really the same. So it took me a while to adjust, sort of learn the language, and they put me in the bottom set for most things I did. Just, I don't know, on assumption, I couldn't really speak in English, so wouldn't be very good at them. So it did take me a while to progress through that, for those, school years, and to sort of learn the language, learn how to interact, because kids at that age aren't always the nicest.
Yeah.
So it does, does take a while to adjust. But the way I look at it now it sort of it builds character, it builds of sort of who you are, and gets to makes you more resilient, I suppose, makes you more comfortable in these quite uncomfortable situations that you might have found yourself in the past. So if you do that again, you kind of look, okay, I know how to deal with whatever is in front of me. So yeah, it was quite tricky to start with, but like I said, I'm only taking the positives out of it, so it worked out really well for me.
Yeah.
And yeah, so after that, just sort of went on to sixth form and university.
Just sorry on that, because I don't know if it'll be clear to our listeners. Am I right in understanding that in 6 years you've gone from not speaking English, moved to another country, to getting into a Russell Group university, doing your economics degree, and then securing a role at a prestigious investment bank?
Yeah, pretty much. Yeah,
that's nuts. That's
well,
nuts.
it was like I said, I had very sort of committed parents who gave me a fantastic foundation. Like I said, mum was a maths teacher. She was never very pushy in terms of where to go, what to do, but they very much instilled in me from a young age that whatever it is you do, you need to do it to well and a good standard. Just apply yourself. Yeah. If it doesn't work, it doesn't work, but just do it. As in, if you've set your mind to it, you can't really back out, and you have to commit.
And I'll just second what Alex said there. It's super commendable to your parents, huge respect to them, and I've heard from you really great things about your siblings as well. Smashing it, you're smashing it. So we're really happy for you, and your story really resonates with me. And when we got to know each other better as well, for those that have listened to my episode on our podcast, you'll hear that we've got quite similar backgrounds.
Absolutely.
Also, moved from Ukraine, didn't speak English, etc., etc. And something that is quite similar across those, I guess I'd say our cultures is probably quite common amongst kind of like immigrant culture. I would say is that our parents move us across the world or to another country where they're kind of reborn themselves and they have to start life again. And I guess one of their sort of key requests from us is that we just make the most of the opportunity.
Exactly that.
And I think, with their guidance and them as our sort of like foundation, they give us those opportunities. So, good on you and your brother for taking that opportunity and running with it. You came at like a later stage to me. So I had it a little bit easier because I went to primary school. Kids are a little bit more welcoming. Mm-hmm. You went into secondary school. That's really tough, man. Like with no language, it's nuts. So well done and congratulations, man.
But like I said, almost it goes to my parents and having a very good, stable sort of family. Brother who's always supportive, always there. Like I said, he's probably my biggest role model in terms of when I was young. Anyway, he's the one that sort of broke barriers in a way, our kind of barriers,
paved the way,
and we followed through. So. Had some,
shout out to him.
Yeah. Maybe we'll get him on at some point.
Probably better stories than I got to say.
So you described a very busy working life, and just out of interest, do you find the time to kind of give back? And if so, like, why is it important to you? And what means do you do so by?
I try to, if I'm honest. It's something that can definitely improve because you do get sort of engrossed in your own life, and again, that's a fault of my own. I should do more, but I would try to do, especially with the banks. Banks do give back a lot where I work, and they've been supporting the main charity. I think is Gosh, got Great Ormond Street Hospital. So we do, we go in there, we sort of help them out, do induction days, run half marathons, do all these sort of cycling events for mainly that charity. So I do try to do a little bit, but again, I know it's nowhere near enough of what I should be doing and what all of us should be doing, because there are so many great causes out there, and you just need to, I say, just basically do as much as you can for all of them.
Yeah, nice. Just, I guess we're not going back into too much detail on your career, but if you could give a piece of advice to someone going into or thinking about going into the profession that you work in now, or investment banking, finance industry generally. What's some of the key advice you would give them looking back?
So there's probably two. So one, don't do as much, just do it better. Don't worry about those applications, sending 60 of them. Do 10, but do them perfectly.
Quality over quantity.
Exactly. I wasn't like that. And, that's where I maybe took longer to get where I wanted to. So that's very much one of them. and probably at that time don't really listen to what other people say. Do what's right for you, because it's very easy to get bogged down into X, Y, and Z is applied here. You know, I need to follow the same. I might not even want to do it, but you know, these are the social pressures, and you very much take too much of that on board. So you know, you need to follow what's right for you. But at the same time, social pressures are good because sometimes they push you
in the right direction.
So
maybe that
find the right balance.
Yeah, and is this something that you always kind of had a keen interest in, or if you could go back and do it all again, would there be something else that you would potentially get into?
Yeah, so again, followed my brother's footsteps. Not that they were wrong, worked out really well, but looking back at it, it's way too theoretical for me. You know, if I could have gone back, I probably definitely would have studied engineering or physics.
So something still that's quite mathematically based.
So it's very mathematically based,
Yeah.
but it's something with a lot more real world application.
Okay.
Whether, you know, you can compare that to a bunch of other jobs out there that could probably, if you compare it to an investment bank, you can probably get to quite a high level of a particular career, whether that's engineering on, I don't know, planes, cars, or whatever, you know, working on whatever physics projects there is potentially quite interesting opportunities. I don't know, I've never explored them, and you know, there's still time. I don't want to close myself off completely, but that's something I always sort of had a back of my mind. If I didn't follow necessarily the trend of what everyone went into do, and actually worked out what I'm good at and what I can actually do, that's what, you know. So maybe what I'd recommend to the listeners, you know, take a step back and be like, don't necessarily follow the crowd. What do you want to do? It might be something similar. You're still at the same uni, you know, still get to see very much the same lifestyle, but you might end up doing something that's more applicable to your own personal skills or interests.
Be the main character in your own movie.
Exactly that, which is easier said, a lot easier said than done, I'd say, especially, you know, if you're in your sort of late teenage years.
100%.
That's brilliant. That's brilliant. And let's just jump onto a really fashionable topic, just very briefly. Side hustles. Do you have a side hustle? Do you do something in your spare time to you know, leverage your knowledge and experience, or maybe something that's more of like an interest?
So it's the only side hustle I probably do, which is pretty much more work, is probably just investing on the side of my own personal money.
Okay.
And which again, I'm quite conservative. Take it, you know, easy. Have a long-term horizon. You know, stocks and bonds. Sort of spend a lot of time understanding all the other products what's out there. So I'm quite, not necessarily passionate, but you know, interested in it, and you know, it makes you money because that's what something I'm good at. So why when I go into an area I don't really know much about and trying to make something out of it there when I've got a bit more than most. So yeah, I'll definitely, like I said again to your listeners, definitely, you know, people should be more literate when it comes to finance, you know, understand their own personal finance. But what I do want to sort of shout out to a lot of people is, you know, to be very, very careful, because, you know, there's a lot of trends, TikToks, Snapchats, Instagram stories. Everyone's getting very rich very quickly. Cryptos. Look what happened there. I mean, again.
And we might get clipped up here and blasted in 5 years' time.
No,
but,
it's not necessarily that.
If you invested at 50K.
No, but again, if you invest at 50K, it dropped down to 20, or, you know, you invest at 5, you still got to. But the issue, what I want to highlight is obviously the leverage. You know, people using leverage without understanding how it really works, how much margin. So when
Can you just define leverage for us?
So leverage is essentially when you borrow money and enter the same trade. So for example, I know these crypto you know, platforms offer leverage of up to 125 times. So if you invest £1,000, your exposure can be 125. I know you need to be an experienced investor, but for example, someone who's starting off, they might get 25 to 50 times the leverage. So you're buying £1,000 worth of Bitcoin, you can actually invest in 50, which might seem great. It goes up 10%. You know, your returns are so much better. However, you get essentially wiped out when it goes the other way. Because if you don't have that kind of margin in your account, you literally, your trade gets closed out as soon as it drops.
Really? Okay.
And then, so your crypto goes from 50 to 20. You might have 20 left, whatever, hypothetically speaking. But if you use too much leverage and not enough margin in the background, that happens, and your 50,000 investment is worth zero.
Yeah.
Because it got closed out at whatever the price is, wherever you didn't have enough margin.
Yeah.
Because people, especially over the last 2 years, expected stuff just to go up. Everything goes up, nothing ever comes down. You know, and if, look, everyone's making money around me. This, you know, these are the trends. Let's sign up to, you know, whatever the platform is and just use leverage. I'd say invest, go out there, you know, be mindful of what you do, you know, spread it around, all great crypto, you know, there's time and a place, there's a percentage, just be very, very careful with leverage until you fully understand and until you can hedge yourself.
Yeah,
That's my one.
Only
takeaway.
ever invest as much as you're able
Exactly.
to lose.
And this isn't investment advice, so
Yeah,
please don't sue us.
It's absolutely not. But yeah, no, that is an interesting topic, and I think we'll at some point get you on to talk more on personal finance. We can maybe break down like different ISAs and how people can
100%.
use those to
100% more than happy to help.
leverage, their own money to create a bit of a cushion for
Safely
future-
leverage.
Safely leverage, maybe a
Yeah.
lot more conservatively,
Yes.
and maybe look at we can potentially get Bio back on and look at some of the more less
Ooh.
conventional types of.
We could have a little debate there.
Yeah, exactly. So no, that's really useful and some great
Mm.
information. Before we close out, we like to ask our listeners a couple of questions. I'll kick this off. The best piece of advice received and the biggest life lesson you would have learned, or you have learnt that you'd give your 18-year-old self. So best piece of advice and the biggest life lesson you learned that you'd give to your 18-year-old self.
So best piece of advice I'd say I'd have to go with, actually, this one I came across recently, is to treat your problems as if they're your best friend's problems. So in terms of you're nowhere near as
Yeah, I
harsh
like that.
and a lot more supportive. Whereas I know that to myself. I'm very critical. Most people are.
Yeah.
Criticize, they just focus on the bad. If your parent has the same problem, you're a lot more relaxed. You're a lot more complimentary. You treat them with a lot more care. So you never get yourself in these deep, dark holes that people, can experience. So that's definitely something I've learned recently.
We also don't give ourselves the same advice that we would give someone else. And I once had a personal dilemma, and I went to a friend and I explained the situation, and he said to me, well, if I was telling this story, what advice would you give me? And like, you've got that gut feeling, that intuition, what the advice is, you just don't want to tell that to yourself. And I think we can all be a little bit more honest with ourselves.
100%. It's one of my, that's a really good bit of advice, and I'm surprised it hasn't come up yet.
Yeah.
There's one of Jordan Peterson's chapters in 12 Rules for Life is you should treat yourself like somebody that you're responsible for.
Yeah.
So simple, but a lot of people don't do it. I know I certainly don't at times.
That's quite similar in terms of it's kind of
exactly the same. And I think another tool in that respect, rather than just thinking about it, write out the thing that you're thinking about and ask yourself, if a friend was telling you this, knowing all that you knew, what would you tell them? And that's probably the best way to go.
You'll soon find the answer.
So to be fair, that was going to be my what advice I could tell my 18 self, because you start worrying about at the moment in the grand scheme of things, pointless things. You spend so much time and energy, whether it's worrying about the thing, the way whatever it is. So no, I said I found it. Don't do it as much anymore, maybe. But writing stuff out and looking at it, maybe writing stuff out, we're not feeling on such a high, and then look back at it later and be like, why am I so worried about these irrelevant things? That, I did great. I'm actually quite good at what I do, and have more confidence in your own ability, I suppose.
Amazing. And just to wrap up then, any podcasts or books that you've listened to which have been particularly kind of influential that you think would our listeners would benefit from reading or listening to?
Yeah, so I wouldn't
including Hard Work Beats Talent, of course.
Absolutely. I wouldn't really say they're from a professional perspective. I don't know. I suppose they all come under one. But from a personal perspective, it's a great, like Freakonomics. I found it's a great place to start. There is essentially covers most economic theory and how it applies to each world situation, and especially covers all the current events. Really interested, if you're interested in that kind of stuff, give it a go. And also, I'd say all the the high performance podcasts, the WSEO, all the ones that kind of have really high caliber individuals on. And I usually find that I'm just interested in the way they're wired, the way the brain works, what drives them, and there's normally one or two really good takeaways from them. So that's what I kind of do on my commutes most of the time, or when I'm exercising or whatever. And book might be a bit tricky. I'd say the one of really good, and again, there's a lot of takers from that one, but A Promised Land by Barack Obama, I found that fascinating. That's a really good book. There's a lot to learn in his approach. He gives sort of, I really enjoyed it. Again, read it for yourself. It is quite long, but I think the reason I liked it more, because I did an audio book, and he narrates it.
Nice. That voice.
Exactly. I think that's why I like it, if I'm honest.
My mum bought me that book, and I maybe got about a seventh of the way through it.
I heard it's a tough read.
Yeah,
It is a tough read. Yeah, I've got
But
that.
again, the only reason I did is, like I said, an audiobook, and that man just sounds
Yeah.
fantastic.
Turn to butter. Amazing. Well, listen, Andreas, thank you so much for joining us today. You really gave us a few gems and broke down the financial profession, banking. I certainly learned a lot about it. I didn't know anything about it, and I definitely have a better understanding of it now, and I'm sure our listeners will too. Alex, any closing words?
No, I just want to echo your comments. I think like I'm a student to finance. I only joined a couple of months ago, and yeah, really good to kind of hear about from someone so experienced. And yeah, I've really enjoyed having you on, and yeah, look forward to continuing this conversation externally as well.
Absolutely. Thanks, guys. It's been a pleasure.
Great. So, guys, thank you so much for listening and joining us on today's episode. Can we please ask you to subscribe, follow, and most importantly, listen. It's Hard Work Beats Talent podcast on all the platforms: YouTube, Spotify, Google, Apple. We're on Instagram, Twitter, and LinkedIn as well. You got any comments, feedback? Give us a shout. Till the next one. Peace out.